Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. Looking at the disk pad right there. We're going to look at that in a second. But right now we're going to look at the chart of the Mini S&P 500 futures contract. Of course, this is the Mini Russell actually contract that we're looking at. Let's see what we're looking at. Here's the TFG. This is our TFG system. As you can see, it's in a short position today. Had a 1, 2, 3 nice winners over the course of several days, but now in a bit of an errant short position. Now, of course, the Russell this morning coming in at 635 is actually just eclipsed its early session high. And so it's certainly strong on a relative basis, the small caps relative to the S&P, which as you can see, here's our day trader 26.0, a couple nice winners. Also in a short position this morning at 1068.75. It's actually flat on the trade. As you can see, there's a nice buy setup from the Master Indian, nice sell setup right there, suggesting the market, the bears are in control. Bit of a divergence here emerging as the market, the mini S&P 500 futures, front month tried to hold on to yesterday's lows, which came in right around, actually right around where we are, right around 67.50, 68. Were the lows. The overnight session lows were around 65, but the market's really just trying to, in a quiet formation, trying to make its way as it digests the impressive move down that we saw yesterday. But as you can see, even here, the up moves in the Russell are much stronger. And as a matter of fact, we just barely got our profit target on this, of course, the TFG trade yesterday. So nice couple of trades right there. But we're actually going to look at, we're going to minimize this, and we're actually trying to look for. Ooh, there's our nice, let's see, what is this? Day Trader 10.0. Look at those beautiful trades in the Day Trader 10.0. Unbelievably nice short setups. Just really favor the short side. We like the short side. You can definitely make a lot of money in very short order. But what we're looking for actually is just eluding us. There we go. A chart of our intraday dynamics. These are our proprietary indicators that we look at to gauge where the market's likely to go. And as you can see, we definitely have a bullish bias. So it looks like the relative outperformance of the Russell that we're seeing early on this Friday, the 25th of June, is certainly indicative of a market that is likely to go higher because, as you can see, excuse me very much, the market's trying to hold its lows around, as we mentioned right now, but it's really battling this trend, coming in right around 1071.56. So if we can get a surge above there, it's probably going to be off to the races around 1080. So that'll be today's free informational trade setup on the ES as a move above 1071.56. We'll call it. We actually already tested 1073.50, I believe, was the high today, correct? 1073.50. So we'll say actually a move above 1073. Well, I'll just call it 1073.50. So a move to new intraday highs will definitely mean a move likely given the overwhelming bullishness. As you can see, bullish, 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 bullish in our proprietary indicators, along with a potentially bottoming formation from a horizontal price perspective. The only thing that we're looking at is the trend is certainly lower, and the trend is right here at 71.56. So go ahead and get your buy tickets ready. Should we see a continuation move above 71.56? Sorry, a move above 71.56, and certainly you want to buy on a continuation move above 73.50. Go ahead and target about 80. We should say, will be a nice target on the move. Now, having said that, conversely, even though we have all these bullish indications, the market is the final arbiter, and we could certainly see a move to the downside. So we'll just call it a break below today's low, and that's a regular trading hours low of 65.25. So should we get below 65.25, actually, yeah. So we just hit that a little while ago. So we're bounced a little bit off. The bears remain in control from a price technical and trend following perspective. So the market on the surface is bearish, but you definitely want to be playing the bearish side close to the vest given the overwhelming bullishness that we're seeing in the market. So buy above 73.50, target 80, purely for educational purposes. Sell below 65.25, and actually if we get a rollover move here, yeah, sell below 75 or 65. We'll just call it 65. Go ahead and target about 5 points or so on the move. If we scroll back, there's really no short-term indication, but if we scroll back, you can see the overwhelming bearishness actually began on this continuation move below the trend on the 21st, Monday, just after Father's Day. They decided to sell, take some profits. But yeah, so we had a continuation move, and as you can see, all this bearishness really emerged. The session actually started out bullish, very bullish, and it just waned and turned into complete bearishness. And as you can see, we've seen a sell-off as a result from around 1110 to 1120, now at 1068. So it's a quick 50 points or so. Roughly, we'll call it 40 points. On the downside, as you can see, there's really been no save this this Fed reaction, overreaction, we should say, no indication of the bulls are in control. But as you can see right now, we're getting our first indication of positive divergences and bullish emergences in terms of the market. So that's why we're looking at a potential buy setup, a quick short-term trade to 1080 and a break below around 1065. But on a daily basis, as we've mentioned, we'll go ahead and minimize that and minimize that. On a daily basis, as we've mentioned, we came up to just a beautiful retest. I can't really say beautiful because we did have an errant move, that gap higher on Monday that we actually mentioned. We had that gap higher on Monday, but as we mentioned, we were going to hold out, even though the market had reclaimed the be-all, end-all of key trend-following support resistance measures around here. For our intents and purposes, we really key off, as mentioned last week, on this blue line right here. So it's 1113.98 right there. We did get the gap, but certainly no closes above, and we're able to hold out, and gratefully so. We didn't get whipped out of our official bearish exposure, which we moved to around 1158 back here about 2 months ago or so in early May. And so for 2 months we've been bearish, and the market, of course, is 84 points, roughly or so, 80 to 85 points in our favor. In terms of the daily bias, we remain officially bearish. So we'll let you know if that changes. But of course, you can subscribe to the actual trading of the official market bias. Probably, as you can see, we haven't had a trade in 2 months. It's $9.99 a year. You can see that on the website. It's actually on the home page. You don't have to wait till the video say, "Oh, we switched to bearish or bullish or neutral on Tuesday," or whenever. You can actually subscribe to that and actually auto trade it as much as you'd like. One E-mini S&P 500 futures contract or several. But we're going to go ahead and switch over and look at the disk pad. We just actually relaunched the disk pad on Tuesday, and as you can see, it's been quite impressive. On Tuesday, it made $1,125. We generally target $1,000 a day, and on Wednesday, it made $1,000, $1,125, made the profit target, and on Thursday, yesterday, made $1,875. Generally, Fridays are taken off. No trading on Fridays. As you can see, it's been a little bit choppy today as the market goes back and forth between the early session high and low. But you can actually subscribe to this as well. Same vehicle as the official market timing. It's a special auto trading setup, but you can actually subscribe to this as well for just $1,500 for 3 months. And that's a $10,000 account. You can get in and start trading with $10,000. And it's the same vehicle. There you go, 41% or so. $4,000, over $4,125 in the last 3 days on the dispatch since inception. So we'll see how that goes. You might want to wait to see how the trading continues, but we have officially opened it again. But we want to look at also want to put a big focus. If you go to the home page, MiniAnalyst.com, you can actually see these new portfolios. What essentially we've done is created the ultimate portfolio by going through all of our 50-plus trading models and really picking out the best of the best. Which ones are the ones that continue to outperform, that are breaking out to new highs. And you can see the ultimate MSA, which is a fixed version, and you can actually refresh, and there's our official market time, and give you the ultimate MSAF. You can get those under MSA portfolios as well. But as you can see, okay, so we're not going to get it there, but here's the MSAF. It's $3,000 every 3 months, $1,500 every 3 months for just the ultimate MSA. It's a $15,000 minimum to get started. You can take a look at it on the website if you have any questions. There's actually all the systems. As you can see, they're all breaking out to new highs. Go to the website, chat with support team live, and actually on a lot of our other portfolios, you can still save 20% by entering promo code video. So shoot us an email to admin@MiniAnalyst.com. Go to the website and chat live, and we'll see you next time. Hope you enjoyed it.